Hey everyone! Welcome back to the channel. Today, we're diving deep into the November 8, 2024 market action, breaking down what happened, and sharing a forecast on where the market might head next. This was another volatile day with major moves across sectors, so let's get right into the numbers and what could be shaping up for tomorrow. Alright, so let's start with the numbers. It's been a roller coaster for stocks lately, and today was no exception. The Dow closed up 0.8%, adding just over 250 points, while the S&P 500 rose 1.2%. But the big winner today was the Nasdaq, gaining nearly 2%, thanks to strong showings in tech stocks. What's driving this? Well, a few things are at play here. Several of the big tech companies, particularly in cloud computing and AI, released strong earnings reports this week. Companies like Microsoft and Nvidia blew past expectations. Investors are betting that tech isn't slowing down anytime soon, even with high interest rates. New consumer sentiment data came in higher than expected. Now, a positive shift in consumer confidence doesn't always move the market, but it does suggest that people are feeling good about the economy, which often leads to more spending. This, in turn, helps boost sectors tied to consumer products and retail. We've all been watching bond yields lately, and today they stayed relatively flat. The 10-year Treasury yield remained around 4.6%, which gave stocks a bit of breathing room. High bond yields usually mean trouble for stocks, especially in tech, but today's steadiness was a relief for traders. So, which sectors stood out today? Technology is the obvious winner, with gains in semiconductors and cloud computing. Nvidia and AMD are doing exceptionally well right now, with momentum from recent product launches in AI and data centers. On the flip side, energy stocks had a rough day. Oil prices are seeing more volatility, and as crude prices dropped back toward $80 per barrel, companies like ExxonMobil and Chevron saw declines. So, what's in store for Monday? Let's look at a few key factors that might drive the market next week. We've got Federal Reserve officials speaking early next week, which always brings some market reaction. The Fed has been cautious on rate cuts despite cooling inflation, so any hint at a policy shift could cause some serious market swings. November's retail sales data is due out, and this one's a biggie. With the holiday season gearing up, investors are watching to see if consumers are still spending. Higher retail sales could bolster consumer-related stocks, especially as we enter the busiest shopping season of the year. Earnings season isn't over yet. Next week, we'll see reports from several key companies in retail and industrials. Walmart and Home Depot are set to report, and those results could give us clues about the strength of the consumer economy. Let's pull up the charts and look at some technicals. S&P 500 has broken through its 200-day moving average, which is generally a bullish sign. If we see continued momentum on Monday, the next resistance level sits around 4,500 points. For the Dow, we're watching the 34,000 mark closely. If it can hold above that level, we could see a potential run-up in the coming weeks, especially if consumer and tech stocks keep their momentum. So, to sum it up, here's what I'd keep an eye on as we start next week. Fed comments, any shift in tone could be huge. Bond yields, keep an eye on that 10-year Treasury yield. Retail earnings, watch Walmart and Home Depot. Holiday spending, early indicators of holiday shopping patterns. And that wraps up today's recap and forecast. There's a lot happening in the market right now, so stay on top of your strategy and don't get swept up by the noise. We'll be back Monday to dig into the action and see if these trends hold up. Thanks for tuning in. Don't forget to like, subscribe, and hit the bell so you never miss an update. See you in the next one, and until then, keep those portfolios strong and your outlook sharp.